The ability to freelance is quickly becoming the new version of a side hustle. I mean, why not? You develop a skill or a trade and then you offer it in the form of a service. Once you do that, you can make as much money as you want, put as much time you want as possible into that freelancing trade, or you can scale back if it gets to be too much. It definitely beats getting another job. But there are hundreds of new freelancers entering the market every year. These range from photographers to people mowing lawns, to graphic designers, to video editors, to proofreaders, to massage therapists. I could keep going on and on. And many of them pay more than their fair share when it comes to taxes. What if I told you there's a way that you can actually reduce your tax bill as long as you keep accurate records of a particular something? That's what we're going to be talking about in this video. Hello everyone, welcome to another edition of Freelance Friday, coming from Financial Anatomy, the place where you can take control of your financial destiny. Here on this channel we talk about personal finance, side hustles, ways to make money online, as well as apps that make you money in some kind of form. And in this video specifically, we're going to lean closer to the side hustle, or let's just take the side out. We're just going to call it hustle because we're talking about freelancing in this video. So when we start freelancing, we don't actually realize that the tax laws are in favor of freelancers and businesses, and we don't take advantage of it fully because often we don't know. One of the things that new freelancers don't take into consideration or don't take advantage of is the fact that the moment they step into freelancing, they're stepping into self-employment. According to US Mobile, the average cell phone bill is $70 for a single user. Some of that, or in some cases all of that, can actually be written off to reduce your taxable income at the end of the year, which means you'll end up paying less money on your freelance income. Now, I've actually talked to a professional tax advisor. His name is Kamari Ellis on my other channel called The App Lifestyle. And we did a live stream talking about taxes and how to save money on taxes via deductions. In that live stream, we shared some great information on how to reduce your taxable income. And specifically, we talked about this cell phone thing. And I'm actually going to play footage from that live stream because it's very useful to you as a freelancer. Now, we are talking about the gig economy, so we're talking about Uber, Lyft, like Postmates drivers. But in the grand scheme of things, they're in the same position as you in terms of tax deductions that can be utilized. So anytime you hear us talk about Uber or Lyft, just switch that out with yourself because the same applies to you. So I'm going to switch over to a clip where we talk about how to actually take advantage of this cell phone deduction and how you need to do it right. Because if you do it wrong, you're most likely going to trigger an audit. So I'm going to switch over to the footage and let Kamari break down the details for you. Yeah.
And even your cell phone is also tax deductible too for anybody that's on a bike or in a car. However,
that was my next question. He beat me to it. I was going to ask, how much can you write off your cell phone reasonably without triggering an audit? Because some people try and write off 100%. And half the time they're on the phone with their girlfriend, and the other half the time they're actually using it for business.
So remember, it's a business expense, right? So it should be anything that's ordinary and necessary for business. So if you have one cell phone line and you're using it for personal and business, please do not, please do not write off 100% of your bill. You're asking for a fight, and you don't want that fight with the IRS. You're not going to win. So I would say use something more reasonable, 60%, 50%. And also, do a pretty good job of documenting the hours that you work. Now, again, when I do tax returns, I do a tax return based on can it stand up to the defense of an audit, which means that if the IRS pulls my tax return, will I be able to defend? Will I be able to prevail? Right. And be able to protect my client, because if not, then oftentimes it usually costs my clients more money. And sometimes, not always, but sometimes it could result in them losing money or being fined and penalized. And nobody likes that. Nobody likes that. So, but yeah, so I would say somewhere 50, 60, 40%. I would just try to be as honest and accurate about that as possible and be able to document and show that and communicate that.
Okay. And so on the flip side, let's say if you have two phones, because a friend that does a bike, he does DoorDash on a bike. he actually has two phones. One is personal use and one is strictly for business. So if you have one strictly for business, in that scenario, you could write off 100% of it, right?
Absolutely, because it's strictly for business. And I mean, listen, a lot of people think the IRS and these tax authorities are dumb. These people are not dumb. So if they see you with one phone, they're like, you're young, you're partying, you're having a good time, you probably got a girlfriend. Bay is out there somewhere, right? It's like he's using his phone to call his girl, or she's using her phone to call her guy, right? So, you know, they're not stupid. They're not stupid.
You know what? I got a question as a YouTuber, because some people do actually do this gig economy stuff, but they have YouTube accounts.
Mm-hmm.
I've made a lot of videos in the past using my phone. So does that give any leeway to up maybe 50% to 60 or 70% in terms of usage?
How many phones do you have?
Right,
because I would assume your YouTube job is separate from your Uber job, right? I mean, they may coincide, but your YouTube money, if you are indeed monetized, is its own separate line of business. Is totally different than Uber, right? Uber has its own issues, so like it's two separate businesses, unless you are doing YouTube for the sake of getting more Uber, like, because I know some people use YouTube to get their referrals up, and things like that. Especially back in the day, people were making buku money using YouTube to get people to get on under their referral system. So
talking to one of them.
You did?
Oh yes.
Oh, nice. That was smart. But you know, you can do that now. You can write your phone off for your YouTube business. You absolutely can. But again, I would just be reasonable about saying how much you use it for personal and how much you're using it for the business. So Elijah, let's use you as a kind of a crash dummy in a scenario. You
use me.
One third, let's say, for your Uber business. Let's say you have, let's say another third for your personal and then another third for your YouTube business. Right. So that's roughly 66.6% of your phone bill, right, used for your business. But it'll be recorded separately.
Right.
On two different schedules. That's how I would do it.
Yeah. We got a hey from Brooke. Well, what's going on, Brooke? Appreciate you tuning in. Todd, I purchased two phones, one for Uber, one for Postmates. I may add other deliveries too. You know what? I got a good question about that. So I don't know if he has a personal phone and those other two phones, but if he's using one for Uber and one for Postmates and one for delivery, one for rideshare, like, could he write off both of those? Or,
I mean, let's just go off the data he gave us, right?
Mm-hmm.
Let's assume that personal is already taken care of. But from the data he gave us, he has a phone for Uber, that's a business phone, and he has a phone for Postmates, that's a business phone. So he has two business phones that he can write off, just on the surface. Now, if he's using them for personal use, I would just make sure you document it. But again, I'm going to assume that he's using them for the business.
Right.